my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. You might remember from a few of my commentaries back some while ago how prices had reached a whole load of topside targets, enough that I had to tidy up this daily chart quite a bit in the process. Anyway, since the move up, we've seen prices move further to integrate what were resistances into support and then to start breaking those supports. They are the broken 2007 to date downtrend, currently at 244.25, the middle time currently 263.5 of the increasingly significant late March to early July bullish Andrews pitchfork, the 2013 high at 253.5, finally the March 2013 high at 240 even. With that last break at 240 even, it seems that we may have started to hit some open territory on the downside, and it did indeed look that way with the move down to 234.25 2 Mondays ago. However, that Monday saw a reversal back up with a gap up into Tuesday, and the whole week making an outside week and very nearly a weekly key reversal up, only being halted by the broken 2007 to date downtrend in finally making it such. The reason was the peak seen in February, March, April, May, and a hesitation in early August between about 228 even to 234 even. These halted the decline and turned the market back up, such that we are back up over most of the supports that became resistance and are now supports again, closing Friday on the 2013 high at 247.25. Significantly below, we still have the rising lower time, currently at 231.25 of the original bullish Andrews pitchfork, and its recent partner, the rising short-medium moving average, currently at 235 even, though that is admittedly starting to deviate away in a more acute fashion. All this action has allowed me to draw a new, more acute bullish Andrews pitchfork for the early July and mid-September action. In this, the new lower time, currently 245.25, seems to be taking lead in indicating the very current bullish angle of attack. We'll have to see if this new bullish Andrews pitchfork is up to mustard as guidance for the renewed bullish incentive, or will it evolve into a less acute bullish shift pitchfork, or maybe into nothing at all? We'll have to wait and see on these. Whatever happens to this new pattern, please remember this key thing, something I've repeated now for a while. The bullish March to July Andrews pitchfork is still very much intact, and until that is broken or reassigned, then it will rule the overall bullish incentive here. London UK feed wheat. A radical rethink here compared to last time. The market had originally peaked up over the flatlining long moving average, currently 195.75, back in mid-August, and failed to make a single close up over it. Prices then dropped away, dipping and closing below the medium moving average, currently at 189.30. The 2021 50% Fibonacci line at 189.5. The 50% Fibonacci line for the August 2020 to May 2021 move at 188 even. And a short medium moving average, currently 185.80. We'd even gone as far as testing some lesser Fibonacci congestion at 182.20 and 181.60. Remember that 181.60 level. Overall, it looked like we had some considerable ammunition overhead to continue pressure prices lower. And apart from the late July hesitation between 174 and 181, there seemed to be little in the way until we reached down to the July lows. I even drew both a bearish Andrews and bearish shift pitchforks for the May to August action as a selective, speculative move on my part in an effort to show the direction. Well, since then, prices did indeed find some support in that 181.60 area, which had also something I had not taken into account, and that's the recent 50% Fibonacci line for the July to August move. This 50% Fibonacci line at 181.60 halted and turned the market back up, such that we are again challenging the flatlining overhead long moving average and once again hesitating before it. Now please do not underestimate this long moving average, and I suspect do not underestimate any buy stops that may lie beyond it. In all this process, I have retired the speculative bearish Andrews and shift pitchforks I had previously drawn for the May to August action, and instead I have drawn a new bullish Andrews pitchfork for the mid-July to early September action. So far, the lower time, currently at 189.80, has behaved well as a support trend line and perhaps as an indicator of the bullish incentive that has recently been revitalized. This now puts forward the question: is the July to date action a possible double or triple top, or is it a large bullish halfway hesitation? What the market does at the long moving average may well determine which it will be. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.